Well, this video is all about trading breakouts. So let's start with a good breakout story, shall we? All right. So it was the late 90s and I was trading breakouts at the time, okay? This is before the internet was really big, so we had bulletin boards back then. And we had a stocks and commodities bulletin boards that I was part of. And we would ask each other questions and give advice and give feedback and so forth. So I wanted to trade the stock. I thought the stock was going to double in price, okay? So I put it on the bulletin board. I asked everybody what they thought, and I was ostracized. I mean, they crucified me, okay? They thought it was the worst trade ever. They thought the stock was going to collapse. They thought it was at an all-time high and it had no more upside. And you know what ultimately happened? The stock went up 5 times. It went 500 times up after I called it. So that taught me something very important, and that's breakouts have the potential to make big moves. Remember that. There's nothing wrong about breakouts. The key is finding the right one, and I'm going to answer a lot of questions for you right now to help you do just that. The first question I want to address is, what's the most important quality that I look at before trading a breakout? And that's a really good question, because instead of looking at the breakout, what I do is I look at the trading action before the breakout. What I want to see is a tight, congested trading range. I don't want to see a lot of trading volatility before the breakout happens. The tighter the range, the tighter the trading range, the better and the more powerful the breakout will be, and it'll have less risk because there's less volatility attached to it. The higher the volatility, the more risk. The lower the volatility, the less risk. So always try to find breakouts that are occurring after a long, tight, congested range. So the next important question is, how long should you wait before putting on a breakout? How long should the stock congest? And that's a very important question, and let me explain to you why. If you only wait about 20 days before turning on a breakout, your profitability will be in the 40th percentile, below random. If you wait about 40 days, if there's a 40-day bridge before the breakout occurs, your profitability will be about 50 to 55%. What we found out over years and years of testing is this: the best breakouts occur after roughly 90 to 100 congestion days. That means you want to see price congest for 90 to 100 days before the price breaks out. And those breakouts are very powerful. So usually give 90 to 100 day window for congestion or sideways trading action before the breakout occurs. And finally, the most important question of the day: how do you confirm that a breakout is real and not a false breakout? Okay, because breakouts do have a tendency to be false a lot of the times. We want to make sure that this breakout is real. What we do is look at the sector and look at other stocks within that sector. You want to make sure that your stock is not the only one breaking out. You want to make sure that other stocks are at least making 52-week highs or are doing similar type of trading action, showing similar type of trading action in the market. So if you're picking a stock and it's the only stock in the index or the sector that's making new highs or breaking out, that's a big warning sign. You want to have confirmation from other related stocks in the sector. Hope that helps. Want to learn more about how to spot breakouts before they strike? Good news. I'm hosting a free Billionaire Breakout Formula class where I'll teach you exactly how to front run Wall Street's fastest trades. Sign up now below this video.